Have you noticed how weirdly quiet it's gotten in the Bitcoin market? Seriously. After that absolutely wild ride to new all-time highs, the price has just kind of stalled. It feels like the calm before a storm, but what's really going on under the surface is this silent, high-stakes tug of war. So let's pull back the curtain on this incredible battle. See, on one side of the rope, you've got your everyday Main Street investors, and right now they're in a state of absolute extreme fear. But on the other side, you've got Wall Street institutions, and they are just quietly, steadily buying everything they can get their hands on. So today, we're going to dissect this dramatic standoff, a conflict that is literally defining Bitcoin's future as we speak. All right, so here's our game plan. First, we'll break down the current market standoff. Then we'll dive deep into the psychology of all that retail fear. We'll contrast that with the methodical institutional buying. Then we'll get into why the old crypto rulebook just got thrown out the window. And finally, we'll map out what to watch for moving forward. Okay, let's jump right into the big mystery. The market is basically a coiled spring right now, just stuck in this super tense consolidation. So what's the deal? Why isn't the price making a big move, either up or down? Well, the price has just been parked right around this $68,000 mark. It's totally caught in this tight range, kind of pinned between the memory of that steep drop from its all-time high of over $126,000 and this surprisingly strong floor of support that just refuses to break. So now, let's talk about the first side of this great divide, the individual retail investor. I mean, you look at the data and it's crystal clear. They are genuinely spooked. I mean, just look at this number, 9. On a scale that goes from 1 to 100, a 9 puts us deep in the territory of extreme fear. This is signaling widespread panic among retail traders. That sharp price drop really shook everyone's confidence. And all that usual social media hype, the when Lambo memes, the constant FOMO, it's almost completely vanished. And this tells you a whole lot about the market's fragile state. Whenever we see these little price rallies pop up, they aren't being driven by new, confident buyers jumping into the market. Nope. It's mostly just shorts, traders who bet the price would go down, who are closing their positions to lock in profits. That's a sign of a really weak foundation, not confident strength. But then you flip the coin, and oh man, you see a completely different universe. While Main Street is hitting the panic sell button, the big financial players on Wall Street are just methodically accumulating. They are playing a much, much longer game. You just have to follow the money, right? On a single day in late February, spot Bitcoin ETFs saw a huge rebound, with a cool $88 million in net new money flowing in. And who's leading this charge? The absolute giants, BlackRock and Fidelity. This is steady, relentless, institutional demand in action. And you know what? Their actions are perfectly aligned with how they feel. A recent Coinbase survey of these huge institutional investors found that an overwhelming 71% believe Bitcoin is currently undervalued at these prices. A whopping 71%. Only a tiny 4% think it's overvalued. That is a massive vote of confidence. And this confidence isn't just some gut feeling either. It's backed up by what's happening in the global economy. As this report from Bitwise points out, central banks all around the world are starting to ease up and make money cheaper, which generally creates a really favorable environment for assets just like Bitcoin. This long-term outlook is reflected everywhere you look, across all kinds of different valuation models. I mean, it doesn't matter if you're looking at models based on scarcity, like the famous stock to flow, or you're comparing it to gold. All the projections for 2030 are pointing towards some pretty significant price appreciation. This is the future that all that institutional money is betting on. So you're probably asking yourself, how can both of these things be true at the same time? What is causing this massive disconnect? Well, the answer is simple, but it's also profound. The entire structure of the Bitcoin market has fundamentally changed. The old playbook, it's been thrown right out the window. This right here, this really captures the entire shift. The old crypto cycles, they were all driven by the 4-year halving event. That's when the creation of new Bitcoin gets cut in half, which would create this massive retail FOMO and lead to these insane price swings. But the new cycle, it's totally different. It's driven by the steady, constant inflow of institutional money through ETFs, which is creating a more mature market with way less extreme volatility. Yeah, this new era is defined by what the pros call patient, sticky capital. It's not hot money that's just looking for a quick flip. This is long-term investment that's here to stay. Think of these ETFs like a giant sponge, just constantly and steadily soaking up the available supply of Bitcoin. With about 7% of all Bitcoin already locked up in these funds, this constant buying pressure is acting like a huge shock absorber, helping to smooth out those wild price swings and making Bitcoin act a lot more like a mature financial asset. All right, so where do we go from here? We're not going to sit here and pretend we have a crystal ball, but we can absolutely identify the key signposts that are going to tell us which side is winning this massive tug of war. So, in the short term, it all boils down to two key numbers. The first one is the huge barrier up at $70,000. If Bitcoin can really break through that ceiling, that is a very strong bullish signal. On the downside, the absolutely crucial floor is 65,000. If the price breaks below that support level, we could be in for more of a downturn. These are the battle lines, plain and simple. So what's the most important thing to take away from all this? It's really understanding that the Bitcoin market is now defined by this incredible divergence. On one side, you have this palpable, real fear from individual investors. And on the other, you have the quiet, unwavering conviction of these massive institutions. Recognizing this conflict is so important because it means the old signals, they just don't work like they used to. Your strategy now has to depend on watching both of these worlds, retail sentiment and institutional money flows. And that leaves us with one final fascinating question. Is this strange quiet just the new normal for a more mature Bitcoin? One that's permanently caught between the old world of retail speculation and the new world of institutional finance? Or is this all just the calm before the next big storm?